In this video, we're going to talk about how you can invest in apartment complexes without having to be the landlord. So I'm Jonathan Lau. I am partners with Elisa Zhang, and I've been investing in real estate for the last 9 years. One way to invest in apartment complexes is by participating in something called an apartment syndication. A real estate syndication is when a group of investors pull together their capital to buy a real estate asset. These assets could be an apartment complex, a mobile home park, self storage. It doesn't matter. The whole idea is that they're pulling together the resources to buy an asset together. And when you think about a syndication, there's typically two parties that you need to know about. One is the general partnership, or also they're known as the sponsor or the syndicator. The second group is the limited partner or the passive investor. So I'll start with the general partnership. You can really break down their responsibilities into 4 steps. The first step is the acquisitions phase. This is where the general partners are going around looking for properties to purchase. So they might be going to other brokers and asking them about deals, or going to the public listings for apartment complexes. But once they find a deal that they like, they conduct something called underwriting, which is a financial analysis on the property. And what they're doing is they want to make sure that the property is actually going to make them money if they purchase it. And so once they find a property that looks good, they'll put an offer on it, and hopefully the seller will accept it and they get it under contract, just like as if you're buying a home. Which that will lead us to the second step, where they will then conduct something called due diligence. That could include walking every single unit and making sure that everything looks okay, checking the major systems in the apartment complex, like a boiler or a chiller, as well as even auditing the financials of the property just to make sure that everything looks good. What they're in due diligence, they're ultimately making sure that there's nothing wrong with the property that's going to blow up the investment and ruin the possibility of having a return. And if everything looks good, they're also going to banks, getting financing, as well as trying to collect money from passive investors so they have enough money to close on the deal. Which brings us to step 3. Step 3 is where the rubber meets the road. This is where the asset team or the sponsorship team will work with the property management company to take over the property and to start managing it. And a key part of step 3 is executing a business plan. And the business plan is ultimately trying to find a way to increase the value of the property. So that may include doing landscaping, painting the outside, going into the units and fixing up the bathrooms and the kitchens and the flooring. The whole idea is that we're trying to make the community a better, safer, more aesthetically pleasing place to live. And ultimately, people will pay more to live in an apartment community like that. And so that's what we're trying to achieve in step 3. But once we are complete with the business plan, that moves us to step 4, where we will ultimately sell the asset and return the profits to the limited partners. And so that's a perfect segue into the second party of a syndication, which is the limited partners or the passive investor. The passive investors contribute a portion of the capital needed in order to close on the property. And in exchange for that capital, they get a percentage of ownership of the entire property. And what's so beautiful about that is that they are able to receive the benefits of real estate investing without having to be the landlord. The general partnership is the one that's doing all the heavy lifting. They still receive the benefits that include getting cash on a quarterly or monthly basis. And when we sell the property, they are able to get profits from the property and get a cash payout. And last but not least, there's a lot of tax benefits they can also leverage as well. And we can get into that on another video. There's a lot of content around tax benefits and real estate. But in short, you can see that syndications are a perfect way for people to passively invest in real estate by leveraging the expertise of the syndicators. You're leveraging their time, their talents, their network, their loan rates that they can get. It's a very powerful way to ultimately invest in real estate. So I hopefully you found this video helpful and you know a little bit more about apartment syndications. If you want to learn more, please check out our website. We have a ton of free content that can help you learn the whole world about syndications. And if you found this video helpful, please like it. And if you want to be aware of new content that comes out, please subscribe. Thank you very much.